Good morning, everyone, and welcome to this taxation panel here today at CryptoCompare Digital Summit. Thank you so much for attending. Firstly, I'll just give a brief introduction to what we're looking to achieve today. Then I'll introduce our panel, and then give a brief summary of the topics we're going to be covering today in our short 35-minute slot. Okay, so digital assets exist outside of national legal frameworks in many countries, available to buy on international exchanges across multiple jurisdictions. It can be challenging to determine where tax is liable to be paid. Our government, legal and audit experts will provide an update on what's on the horizon for digital asset taxation. Okay, so introduction from myself. My name's Ian Taylor, as Paul mentioned. I'm the chair of CryptoUK. We're the UK's premier and primary trade body. A trade body is tasked with representing a member base. We have over 30 members. So we at CryptoUK also look to lobby government. We want to promote the new industry in a fair and just way to change, if you like, the perceptions that crypto is bad. We want balanced and proactive legislation coming out of Treasury. We also run roundtables, education forums, and conferences. Okay, so that's enough from my side. If I first introduce Dion from HMRC, if you would like to give a brief introduction of yourself and what you do.
Thank you, Ian. So I'm Dion Seymour from HMRC. I represent ourselves as a policy and tax specialist for crypto assets. I'm sure tax is a very interesting topic that you all want to hear more about, but it's hard to avoid, and as HMRC, we have that duty to collect it. So I feel sorry for the introducer who took a month to collate his report. But I would also say that there are agents available who can help him with that. One such agent is BDO. So I'll hand over to David.
Hi, everyone. My name's David Britton. I'm a tax partner at BDO. I am mainly on the corporate tax side. I'll let Chris introduce himself in a minute. He's on the personal tax side. But from a BDO perspective, I lead the crypto tax world. So anything that comes through BDO where there's a crypto element will have to get sign off from me. I've had 20-odd years experience in tax, principally focused on banking, fintech, and crypto, as obviously the crypto world develops. But obviously there's a huge crossover between all the three sectors. But more so in the last couple of years I've been dealing with on the crypto. And as Dion said, we've been working closely together as an industry body with the professional services and the government agencies around this.
Thank you, David. May I hand over to Robert Stainthorp, please?
Rob Stainthorp. So I'm a member of HMRC's Capital Gains Tax Technical Group. So we mainly focus on applying the existing legislation to lots of different aspects, but obviously crypto assets is one of those things that we're now taking a look at. My main sort of involvement within the crypto space has actually been on the education of HMRC staff, so sort of our internal training and then also the policy papers that have been published.
Thank you, Robert. And finally over to Chris Mann from BDO.
So good morning. I also work at BDO with David. I focus on the personal tax side, so I advise individuals when it comes to when they're selling their crypto assets and how to report it. We also do a lot of work working with individual clients in terms of how crypto's taxed for them, but also where they haven't necessarily reported it correctly in the past. We help them to kind of correct historical errors.
Thank you, guys. Okay, so we've structured this session. Firstly, we're going to talk about where we are today, setting the scene. Then we'll move on to the differences across different jurisdictions. Then we'll finish off with major issues concerning market participants. And then we'll have a Q&A session at the end. You folks are aware there is Slido, so you can lodge questions as you think of them, and then we'll deal with them at the end. As this is the institutional stage, we thought best to focus on market participants. However, we are aware that there is retail and consumer taxation, so we will cover that off during the panel as well. Okay, so without further ado, let's set the scene. So crypto assets in the majority of jurisdictions fall under that domicile tax regime. So many jurisdictions have issued varying forms of guidance. We've seen 2 pieces of guidance come out of the UK. We've seen recent guidance at the back end of last year come out of the IRS. So perhaps I'll open up to Dion at HMRC just to talk around what you've released thus far and the feedback you may have heard regarding that.
Absolutely. So, as you alluded to, we've got two main pieces of guidance out at the moment from HMRC on crypto assets. That's the taxation of crypto assets for individuals and for businesses. The individual paper was released in December 2018, further updated in December 2019, and our business paper was released in November 2019 as well. What they actually cover is, we consider, some of the most detailed guidance that's actually been released from any tax jurisdiction in the world. It covers the main basics of what you actually have to do with crypto assets, and we've also tried to make it a lot more user-friendly by trying to give examples of why they're treated the way that they actually are. It's helpful at this point to say that we've been engaging with industry, as David alludes to, in this regard. So not only do we like to talk to CryptoUK and Global Digital Finance, we also have a crypto asset roundtable where we've actually been discussing the taxation approach for crypto assets for quite some time now. That roundtable came into being in 2018, and it's fair to say, from my perspective, that the roundtable has been incredibly useful and has been really helpful come to the positions that we've come to. We like to think that we've reached a better position than some of the other jurisdictions, which obviously we're not really going to go into too much detail at this particular point in time, but we feel that it's actually a really sensible outcome where we actually are.
Thank you, Dion. And if I may just add, the IRS has, which is obviously a large jurisdiction, one of the largest in the world, they have released some guidance. It took a lot of stick in the press, from my understanding. I just wondered if I open up to the panel. My personal view is, and I've worked with Dion and the great work he's doing at HMRC, to be a progressive regime to give guidance for the community of how to handle the many variances and technical issues such as hard forks and airdrops. If anyone else in the panel has a view, can they agree or disagree as the UK?
Yeah, yeah, I can add my point. I mean, it's not often that professional services agree with HMRC, but I think on this instance, I think there was a need for clarity in terms of the crypto asset world. I mean, I think those that have read the guidance, the main thing is that we're not really changing legislation. We're fitting crypto assets within the legislation, which is a great help. And I think that for people, actually, what do they want? Companies and people, they want certainty in terms of their tax affairs. And there's been an open door policy with Dion that as people come up with new ideas, very open to discuss it. What does that mean? But actually, the tax regime actually fits quite well in terms of how we deal with crypto assets. And we can come on briefly in terms of what that means. But I think for what I see in the market is a degree of certainty, so people know from a corporate and personal tax point of view, what does it mean to them to either deal in or trade or actually have a business that uses crypto. And I think that's the main thing, is like, can they file, do you know what tax you're going to pay, and you can make a business decision. And I think fundamentally that's what I see. But when people come to talk to me, tax always seems to get forgotten. And I think that's, or because people have got an innovative idea, so you come up with the idea, you've got to really, you then think about how does that transform into the business, and then people forget about the admin and the regulatory point of view. And I think that's where we see a lot. It's not so much around trying to fit it into the legislation, it's trying to deal with people that need to deal with their filing position, and clearly the guidance helps on that.
Thank you, David. And that leads us nicely into our next section, differences in tax treatments across the globe. Now, let's focus for now on the UK. You're probably aware that crypto assets are treated as property in the UK and thus fall under capital gains tax. And we so have, fortunately, a chap here who's an expert in capital gains tax. So perhaps let's, if I open it up to you, Robert, to talk about how that works and what folks from a retail consumer perspective should be thinking about. Because remember, taxation is there. You cannot forget about it, as David mentioned. Although lots of these products are not regulated yet, governments are looking at this, and we've seen lots of information requests come out of jurisdictions to exchanges. Our members have had these letters from many jurisdictions across the globe. So please don't forget that you have a tax liability. So with that in mind, please, Robert, thank you.
Yeah, absolutely. So capital gains tax really is sort of designed to be the mop that picks up after income tax. So whilst lots of people in this space may describe themselves as, oh, I trade in crypto assets, that's really your first question to ask from a tax perspective is, are you trading for tax purposes? And trading in sort of tax history is quite a loaded term, and there's lots of case law that sort of sets the bar that you have to meet. And in a lot of cases, as the guidance explains, we don't think that that bar is going to be crossed. So you fall into capital gains tax, which is the sort of the regime that I work in. Essentially, the message that we're trying to get out is that people do need to start keeping records of the costs that they've acquired things for. They need to understand what a disposal is for capital gains tax. So that might not just be selling for things like fiat currency. It could also be swapping for a different type of crypto asset. We would still see that as a chargeable event for us. And the record keeping is going to be a big thing, really. So there are lots of providers now that are starting to work on calculators that you can use, because there can be some fairly involved computations when there's a lot of transactions. But the help is out there, both in terms of the guidance that we've published and tax agents and software providers to help you get that right. But yeah, the record keeping is definitely something that I would focus on. So what you bought it for and what you sold it for is really important.
Thank you, Rob. And maybe if I could just bring in some of the other taxes to consider, such as sales tax, VAT, inheritance tax, withholding tax. Perhaps if I could pass on to you, Chris, if you could maybe discuss any of them in your experience. Are you seeing folks in the community that are struggling with these different areas?
Yeah, no, certainly. I think the one thing I will say is that I think the guidance that's been produced by HMRC in the last few years has made our conversations with our clients a lot easier. There's been a lot more clarity around kind of how you treat crypto. I think up to even a couple of years ago, people were still hanging on the kind of publications back in 2014, believing that kind of, you could fall into that betting or gambling area. But thankfully, all that has been kind of pretty much demystified by the guidance that's been produced, which has been very helpful from our side, especially when you're having conversations with clients that come in and at the end of the meeting, they say, oh, by the way, I've sold some crypto and it's not taxable. So it's been helpful on that side. I think that there still there's a lot of education that still needs to be done in the market. So from my perspective, when I'm advising individual clients, they come in and they don't have a tax pack that you might have with traditional assets. They tend to kind of come in and say, well, what do we do? And unfortunately, a lot of personal tax clients tend to do their tax returns in January with the deadline being the 31st, which doesn't help. So I think the guidance that's been provided by HMRC has been very, very useful. It can obviously go further, and as David mentioned, we work with Dion in terms of these discussion groups, and Dion's very open to kind of hearing our thoughts and views. But in terms of other taxes, there's certainly areas where we're getting we're better at, and we've got more guidance on, which makes it easier when advising clients. But I think the big thing is any clients that have crypto assets or selling, exchanging them, they all need to sort of take advice, because it's not necessarily an easy area.
Mm-hmm. Thank you guys. And just sort of to paint the picture across different jurisdictions. So as you know, in the UK, we treat crypto assets as property. Whereas if you were a tax domicile of Switzerland, they do not treat it as property. They look at it as a currency, and thus it's not taxed under capital gains. However, they do cover within wealth tax. So as we were discussing the other week, you may think that you can tax arbitrage across perhaps different regions. However, you will be taxed every single year on your crypto asset gains in Switzerland. Whereas if it's treated as property, you only realise the loss or gain at the time of disposal. So please do go and read these guidances. They're pretty clear and easy to understand. And just a couple of other issues there. Hong Kong doesn't tax crypto assets. They have no capital gains tax. So if you're domiciled there, that's good. And I do understand that Australia has a sliding scale, which is quite interesting. So you can spend a certain amount under a de minimis, which I believe is either 1,000 Australian dollars. Don't quote me on that, but I know that's quite a progressive. And just to bear in mind that we have a limit, don't we, in the UK, of capital gains tax. Remind me, is it 12,000
Around about 12,000, depending
Okay.
on the year you're looking at. 12,500 currently for the annual exempt allowance.
But you should still report underneath that, right? But you just won't have a taxable gain.
Well, that starts to become a bit more tricky. You should, ideally, if you have any losses, you should definitely report those because those you can actually keep. The actual process of declaring if you're below the annual exempt allowance is also dependent upon how much that gain relates to your income. But, so it is slightly more nuanced, but once you're definitely over 12,500, then you need to be declaring.
Okay. Thank you, guys. All right, let's move on to some of the major issues. Let's start with market participants. One issue that was raised by our members, Coinbase, and unfortunately Lawrence couldn't attend because of the ban for travel for many organizations, is the digital services tax. Now, some folks will be aware this rolls out 1st of April 2020. Just a brief update of what this is. So this affects large firms, I believe, from my notes, in-scope businesses of 500 million in global turnover. So it may not affect some of the new startups that we have here today, but certainly affect those large exchanges that are turning over in excess of $1 billion right now. And they have a big UK presence. This is mainly geared towards search engines, social media platforms, and online marketplaces. So that online marketplace, we see a Toro downstairs, this new tax of 2% annually may impact these companies. So these are being flagged as major risks for some of the market participants. Maybe if I open it up to anyone on the panel, does anybody have any views around this?
And I think, Ian, there's two elements to it. So the digital services tax, obviously the UK have issued their own, which comes into force. Now, these guys to the side of me won't be able to comment on this given the budget tomorrow. But there is talk, obviously, this is the UK digital services tax is coming into force. Now, when you read the criteria, it's clearly aimed at Google, Amazon, Twitter, Facebook, etc. But it could impact it similarly in terms of, Ian says, in terms of online marketplaces. But there is talk that obviously the US don't like this because it's clearly they feel it's a tax on US corporates. And we are obviously in the middle or are starting trade negotiations with the US. The French issued a digital services tax. They put it on hold because of the comments made by the US. And I wouldn't be entirely surprised if it was postponed come tomorrow for the UK, given the sensitivity with our negotiations with the US, but one to watch out for. And the other point which Ian was talking about, there is another one which is, you might have heard it, but the OECD are currently in discussions about the taxation of the digital economy. And here, this is really aimed at the same things in terms of online digital platforms, marketplaces, where they are looking at very large multinational enterprises with, as Ian said, turnover of 750 million euros is the initial things. But essentially what this is trying to do, it's trying to scrap the way that normal corporates are taxed. So this is really aimed at corporates. Whereas historically you are taxed in a jurisdiction where you tend to have some sort of presence, so be a permanent presence, a building, people trading in your name. The digital services tax or the taxation of the digital economy under the OECD is really looking at the end user. So they're trying to say that whereas historically if your end user was in France but you had no one in France there, you wouldn't have a corporate tax liability. But what the OECD model is saying is actually you could have a presence, it's where the user of your system is. So once again, this is really aimed at the US and the big players in the US, which historically have been, as you would expect, putting their IP in low tax jurisdictions, and there is a common perception that they're not paying their fair amount of tax in certain jurisdictions, so they're really looking at low tax in high tax jurisdictions where the end user is, and this is what the OECD are trying to look at. It's currently in consultation. It's changed a number of times, and the latest guidance was issued in January 2020. And if you look at it, those that are fintech and are regulated, there may actually be an exemption. Aside from the high bar limit of the 750, there is actually going to be exemptions for banks, insurers, and regulated entities. What that definition means for regulated, you have to look at. So those that may be fintech might get an exemption, But any unregulated businesses that fall within this, fall within the remit of a digital workplace, essentially environment, could be caught subject to these limits. So it could be a real headache, because you might think you've only got a UK tax liability or an overseas tax liability, but actually watch out, you might end up with multiple filing obligations and multiple tax.
Yeah, that's really interesting, David, because for me, the theory, generally with any tax policy, is sound. The misalignment of where profits are taxed versus where the value is created. Yeah. And interestingly, that we know we have the budget tomorrow, and your point to it may be canned, and then we step into the political situation, because we're now in the UK in trade talks with the US and many other jurisdictions. So does anyone else on the panel have any things to add to this taxation and the issues this may cause?
From HMRC side, we can't comment because of the budget, as David alluded to. So unless Chris has a different view from David on BDO. So.
No.
Okay, thank you. Well, let's move on. We touched on it earlier. Education. Now, during a recent roundtable that CryptoUK hosted with the HMRC to educate our members, the discussion around educating our member base, both institutional and consumer, it's quite an interesting piece, and we concluded that we could do more. So how do we do more? Let me start with Dion, and then we'll pass it all along the panel for everyone's experience.
Education is actually a really important and really interesting topic in this space. I've commented to other people that when we are talking, should we say to minister, when we're talking to other parts of the government, there is a lot of fear around crypto assets. You see a lot of headlines where you talk about crypto queen, talk about Hamas getting funding from crypto. And so it creates that perception that actually everyone in here is a bad actor, which also sometimes makes people a bit afraid, should we say, about not coming forward to say they've got crypto assets. So how do we actually educate, one, that it's HMRC, that we don't necessarily think everyone's a bad actor, and secondly, how do we let people know what their legal obligations actually are? How do we educate that? We held a customer immersion sessions recently just across the way in Canary Wharf, where we invited customers in to come and talk to us about their experiences with crypto assets and HMRC. And it's fair to say that the takeaway from that event was most of the people we've spoken to were technologists first, investors second, and taxpayers third. And that's not to say that they weren't willing to pay tax, but they didn't understand that they were being caught by a tax net, if you will. They didn't necessarily understand the complexities to actually engaging with crypto assets in this way. And so education has become quite difficult. So for the UK, we've got the guidance. We're working with trade groups such as CryptoUK, GDF, and engaging with the agents such as David on the round table to also help educate the accountants. So we're, the Big Four, the professional bodies, all those people, because we are also aware that at times the agents the accountants are being educated by their customers. And so they're not necessarily coming to, should we say, HMRC's perspective of the correct conclusion.
What we should remember as well, in the UK, we have PAYE. So if you don't have any other investments, you don't have to do a tax return. All of a sudden, you start investing in crypto assets, and you've never submitted a self-assessment form before. You fall into this whole new world. Different in the US, because they don't have a PAYE scheme. So it's up to us as a community to help drive adoption, because this, as I understand, can be harmful for the adoption overall of the use case of crypto assets, however you want to use it. So, David, do you have any thoughts around education? What are you seeing out there in the community?
Yeah, I mean, I think for me, the education piece, but I think the thing is that there's a difference between the corporate tax return and an individual's tax return. You're right, people just didn't realise, I think historically, that they needed to file a tax return from a personal tax point of view. So I think the biggest risk, I don't think it's through deliberate misfiling. I think it's about not realising you had to file a return and keeping the information. I think from a corporate tax, which I deal with mainly, it's pretty, you have to file a tax return because there's a notification automatic from revenue as soon as you set up a company. But then it's the education piece is, well, what does that mean from a corporate? So how does the accounting work? How does then the tax treatment fall off the back of that? So there's an awful lot around education in that respect about how do you treat it from a corporate tax point of view, and then going on to, well, how do you get paid how do people get paid if they've been paid in crypto? What does that mean from their own personal tax point of view, PAYE, as you mentioned, but then that filters on to their own personal tax returns. So there's the two pieces, but it's definitely around, I think the education piece is more on the personal tax. The corporate, the education is about getting the tax return right. I think the personal tax is people remembering they needed to file it.
And with regard to if you work for digital asset business and you get paid in Bitcoin, that is covered off in HMRC's guidance. So maybe if I can hand over to Robert for your views around education and what you're doing.
So for us, the sort of big challenge for education has been of our own staff. So, you know, we've got lots of people working in different areas, so compliance or customer service are the people who are answering taxpayers' queries. And, you know, you've got this new area that's got a lot of jargon, and people sort of have a bit of a fear factor around that, sort of our staff to begin with. So initially, in terms of training, it was people like Dion doing roadshows around HMRC offices, trying to sort of engage with the people that might be answering queries or working cases that involve crypto assets. So in terms of our internal education, we've now sort of stepped that up into some e-learning packages that we use, and we're really encouraging staff in all areas to at least build a basic familiarity of the key terms. So, you know, they certainly won't come across as crypto experts, and I don't think anyone in the department would describe themselves as that. But at the very least, they will be able to identify what a customer is talking about, and you know, we can help them with their questions. And hopefully we're getting there in terms of how our staff are trained up in this area.
Thank you. And then, you know, if I just turn the discussion on to perhaps reporting standards, and you folks may be aware there's two major bodies out there, the US GAAP and IFRS, International Financial Reporting Standards. Could you speak to, has there been any guidance? How should a company account for any gains or losses, for example, or even assets, liabilities?
Yeah, I mean, from an individual's perspective, so I specialise in personal tax, so David probably can comment on the company side, but I think one of our biggest issues is the quality of information that individuals get when they're kind of trading in crypto. One of the big things that kind of we see, and we talk to clients and they say that they would probably do more if they knew that what they were getting back from an exchange was in a format or in a form that they could easily pass on to their accountant, or they could just take figures from it and do it themselves on HMRC software. Because I think at the moment that the nature of investing in crypto assets is that you're doing multiple trades and there's a lot of information, and sometimes that can be quite overwhelming for individuals. So we do get people that do bury their head in the sand because they just don't understand how to do it. So one of the things that we try and do as part of our educational piece is actually talking to individuals, talking to clients about how we can support them in extracting that information and actually reporting it. But from the company side...
Yeah, so as Ian said, the two major accountancy bodies have really looked at this because they're trying to decide how do you actually account for holding of crypto. If I talk about the ISB and on IFRS, and also UK GAAP follows this as well, there was some debate as to what was, if you say it was cryptocurrency, at the initial outset, everyone said, well, it's got currency in its name, therefore it must be cash. And when you look at it, to be a currency from normal fiat standards, it has to be issued by a central banking authority, such as the Bank of England or equivalent, and it has to be a form that is used freely as a means of exchange for payment. Now, it doesn't meet a cryptocurrency, crypto asset doesn't meet any of those requirements. So from an accounting point of view, it's not actually currency. It's also not a financial asset for accounting purposes. And so what it actually comes down to is it's an intangible asset for accounting, or if you're holding it and trading through it, it could be stock.
Okay.
And then the accounting rules that you would normally follow for intangible assets and stock would follow, and then actually from a corporate tax point of view, broadly, you follow the accounting treatment.
Great.
Yeah,
That's
I'd just like to follow on from David just quickly there.
Sure.
Just to highlight the bit, just because it was called cryptocurrency did not mean it was money. And I would like to highlight there, because it also relates to one of the questions on there, about the treatment of crypto. The fact that this is one of our, should we say, one of our main 3 misconceptions. Just because even if it was a currency, wouldn't actually mean the tax treatment would actually necessarily be any different from what already exists. The only asset in the UK that's not considered to be an asset for capital gains purposes is sterling. Every other currency will still be considered to be an asset. However, there's certain parts of the legislation that means, for example, holiday money, when you're converting your euros or dollars when you go abroad, isn't actually caught by the capital gains net. So the fact that it's not called money isn't why we are where we are. It is because it is fundamentally an asset, and it would still be an asset unless it met the criteria that David was just saying there, for example, issued by a central bank.
Well, thank you very much for a really interesting, in-depth technical discussion. We've reached the last few minutes of the session, and I see we've got a bunch of questions. If I could perhaps hand over to Paul. Do you want to introduce them? I'll just read them off the screen. Okay. So let's perhaps start with the top one. In the UK, you're allowed to issue an invoice in Bitcoin as a limited company, LLP or sole trader. That's a question. Does anybody have an answer to this question?
Yeah, you can.
Yeah.
You can, but it comes back to Dion's point in terms of from an accounting and a tax point of view, you have to translate that back into a fiat currency. So you can issue it, and then you have to watch out for VAT, because VAT rules, if you're trading and you follow a normal VAT, if you're, say you sell tomatoes in exchange for Bitcoin as a currency or as a means of exchange, you have to account for VAT on that, and then you have to apply the spot rate at the point of the date of the invoice is raised.
It does complicate it somewhat, doesn't it?
Does, yeah. You can do it, though. And it doesn't matter whether you're limited, LLP, or a sole trader.
Yep.
Okay, thank you for that answer, and thank you for the question, Vlad. On to the next question. What is the panel's view on regulated property exchanges trading digital representation of HMLR registered property?
So I'm assuming this is obviously looking at digital street, as it's called, from the land registry, looking at actually representing property by means of tokenization. Whether or not that would actually fall under cryptos is perhaps where the end of the question goes there. So we've identified crypto assets as being an umbrella term encompassing exchange tokens, utility tokens, and security tokens.
Yeah.
Security tokens being the key element here would be something that should be almost like a regulated product. And in this regard, one would argue potentially that would come under the tokenization of a security token. Now, it has to be borne in mind that the digital street is still at a proof of concept stage, and we are having conversations with the land registry, and we are considering what implications that may have for taxation purposes.
Yeah, just to add to that, there's lots of discussions today, and there have been recently, around security tokens. Generally, most folks believe, and I also believe this, that you issue a security token that fractionalizes any underlying asset will be treated the same way as a regular security, both in terms of regulation and in terms of taxation. So be mindful of that. All right, we have a minute or so left. Let's pick up another question. Let's see. How about this one? This is interesting. How does HMRC collect data on digital asset trading? Quite relevant.
Here we go with my bespoke press office line. HMRC will use the powers provided by Parliament to gather information from any actors that are involved in the space. So fundamentally, that means that, as we will do in other areas of industry, we will engage and we will use information powers to get information. We already get information from banks, estate agents, all the main players, as you can imagine. Crypto asset exchanges, as you may surmise from that, are going to be no different in that regard. And there's no point beating around the bush because it went into public tender, which I'm sure most people would have read here, as well as us developing our own tracing tool capabilities to actually track down and follow the crypto asset flow.
And I would just to add to that point, I mean, obviously, there is an enforcement in terms of what HMRC will do to look at terms of what has been, should be taxable. I think the one thing to say is that the UK system is self-assessment. So therefore, it is your responsibility as either corporates or individuals to pay the right amount of tax, and it's you are self-assessing. So the fact that they may not come a call in initially, you still have an obligation to file the tax returns accurately and appropriately.
We can play a very long game.
Yeah.
I think it's worth adding to that point, and we've come to the end of our session, is that the HMRC is a government body, a government agency. It has the powers to set regulation, but it's not bad. It's not out there to kill you, hurt you. I think you can see today that the HMRC are here and willing to discuss and be active in the community. My experience is Dion runs roundtables, he attends conferences, he engages with his own staff and team to understand what's happening here. So let's be mindful, if you have a question, please do reach out to any of our panelists. And if you read the guidance, that they are willing to discuss any nuances, such as forks, if you don't know how to treat that. If there's no price, how do you quantify the value of a liquid token? These are discussions that folks are willing to have. So I think I'd like to thank our panel for a really interesting discussion. And if you have any further questions, please do contact either myself, our details will be on the website, or any of our panelists here for any further discussions. We'll be around all day. So to that end, thank you very much.
Thank you. Thank you.